This is Cary with Wicked Signal, and today's video on Bitcoin was recorded Monday, December 21st, 2020. I thought I'd throw in my 2 cents on this increasingly popular product or entity or tradable, I don't know, what do you call it? Is it a currency? In any event, we are at all-time highs as of this week. I'm going to show some history here on this chart. It goes back to 2017, and I'll show you some buy signals. Let's take a look at the extremes from 2017. You got 19,315, broke to 3136 in 18, back up to 13,858 in 19, and then in 2020, the COVID low, as I keep calling it, 4428. And then we pushed on to new highs most recently. 24,084 is actually Monday's high, this week's high, Monday, December 21st. And so let's move on to the next chart. I'm just going to show you here a series of buy signals. Most notably is July of this year when we pushed through roughly the 10,000 area, that channel structure. That set off follow-through buying. We had a secondary buy signal in November above roughly 15,000. And most recently, last week, we closed above an extreme channel formation that this week is at 22,389. We've got a low this week of 21,917, so we dipped below it. But as long as we continue placing weekly settlements above this formation, this market remains in a hyperbolic state. A hyperbolic rally. It's getting increasingly vertical, obviously, and the big question is, where is it going? Here's a couple points I have. One is the classic A-B wave pattern that I show here. We had the previous all-time high in 2017, against that 2018 low. That's A-B. You subtract them out, add to A, full swing to the upside, having taken out that 2017 high recently, actually. So the A minus B plus A is 35,493. And the extreme, the double channel extension, is at 39,600. So yes, I think there's every reason to consider the mid 30,000, upper 30,000 area as a realistic objective. That would not even be a doubling of present price levels, and we've certainly more than doubled in value on a number of occasions here in this contract. So not far-fetched, and in fact, I think continued weekly settlements above the 22,389 formation, which, by the way, rises 4 weeks from now to 22,467. You can subtract those two numbers out, divide by 4, and you have the exact location of that channel structure into later January. Continued weekly settlements above it maintains the possibility, and actually I think the likelihood, the probability for bullish continuation over the coming months into the mid 30,000 to upper 30,000 area. This is a weekly chart, by the way, so you can see that it doesn't take much to consider over the next 6 to 9 months, perhaps, that we could continue into the 35,493 area to 39,600 region, where this, at that point in time, we need to take a fresh look, of course, but I think that's a realistic objective. And so that's all that really needs to be said there. Now let's take a look at what if we break back and close below this 22,389 formation at the end of this week, for instance. Well, we still have the 19,315 high from 2017 that offers initial support, but the most recent high this week, actually, you can how should I say, build an ascending 1/3 speed line against that all-time 2018 low, and that comes in at 16,979 this week, rises to 17,500 the week of January 18th. So that is our floor of support, actually. So how do I phrase this? If we close below 22,389 at the end of this week, I think you should allow for a pullback into the 19,315 area within a week, 2 or 3. And really, the stick your neck out and buy zone, in my opinion, under this scenario, is a 17,500, let's just call it, that week of Monday, January 18th. And that is your floor of support. That is an area that can absorb selling by that point in time into spring, summer of 2021. And from there, we can push onward to new highs. Not unless we close below that speed line do I think we place a good high summer of next year. And we're going to tweak this just a little bit. I'm going to show you something, and we'll zoom in here and take a look at, so far, the high move was this week, 24,084. And if the low of the week stays intact at 21,917, and next week we close below 21,917, that would pivot us south into early January. So that is also a sell signal. I'm probably nuancing this just a little bit, because I could just stick with the plain, simple closing below the 22,389 channel structure at the end of this week is not a good sign, at least near term, for Bitcoin, because I think the market is likely to continue south into what's called the 17,000 handle over the coming weeks. But if you want to finesse it, a settlement next week below 21,917 would also be sign enough to not be long Bitcoin into January trade. Let's talk. Let's just leave it at this. I'll leave you with this last slide, which is the bottom line here. Continued weekly settlements above 22,389 maintains a bullish dynamic into spring, summer of next year, and we should, over the next 6 to 9 months, continue into the 35,000 to 39,000 region. And that is all I'm going to say for this particular Wicked Signal video on Bitcoin.